Welcome to Unfoolish Investing, everybody. I'm one of your hosts, Victor.
I'm Larry.
We will. Okay. How about that? I'm going to edit
Leave
that
that
out
in.
later on. This is Unfoolish Investing, where we focus on making smart, simple, and lasting investment decisions. That's right, lasting investment decisions that build long-term wealth today. We're driving into two key investments, not one, two, in the real estate space. That is HOMZ, HOMZ ETF, and DR Horton, both of which are amazing choices for a set it and forget it investment strategy. We'll explore why these investments make sense in the current real estate market, provide some background, talk about the top stocks in the HOMZ, and explain how these investments fit into a long-term, hands-off approach. What do you think about that, Larry?
I'm excited. Let's go.
Awesome. So over here, we are going to start with HOMZ. And let me just do something amazing that I thought I already did, and that is share my screen. Ever done that at home, people? You thought your screen was shared? It wasn't.
All the time. All the time.
Let me just go back. HOMZ is a real estate focused ETF. The ETF is diversified across multiple sectors, including home builders like DR Horton, real estate services, building material suppliers, and residential REITs. What do you think about the HOMZ ETF there, Larry?
Yeah, so one of the things that I like about it is the amount of diversification you get while still being specific to, kind of the real estate space. But it seems like it has a little bit of everything. It's all the way from home building materials down to furnishings, the builders themselves, even the mortgages. Like they've got a mortgage piece, they've got a property insurance piece, real estate technology, all the way down to actual like REITs that you mentioned. So, if you're thinking about the set it and forget it strategy, this might be a good option for you if you want to get some exposure to the real estate home builder sector without buying individual stocks.
I agree, and I'm glad you mentioned the REIT section because one of the key players I see in HOMZ is Invitation Homes, which is a residential REIT. I'm not sure you're familiar with them, but they specialize in single family rentals, which has been
Oh, interesting.
benefiting from the growing trends that
hmm
is going on in this country of renting homes instead of buying homes. Um, have you ever looked into Invitation?
I haven't. The only REIT that I own that's in the HOMZ ETF is MAA Mid America Apartment Communities. That's something that I bought on like a one time lump purchase during the kind of the COVID downturn. That's been a nice winner for me, but not
Yeah.
something I've really researched further since.
I mean, that one sounds like a great read as well. That to me is the benefit of owning an ETF like Homes is you're going to get exposure into a world that you may not think about investing in yourself, but you see the growth in, and that's sort of why I like this ETF. And another major holding inside of Homes is everybody's favorite orange home improvement store, Home Depot. As people renovate their homes and build new ones, where are they going to go on a daily basis to do the DIY projects? Home Depot. Of course, they could go to Lowe's, but I still find more people going to Home Depot. And what I feel like makes them a difference between a Lowe's is that Home Depot's got that large exposure into the contractor world. So
Yeah,
it's not
yeah.
just,
They're more tradesperson focused. Yeah.
and that to me is the great thing about owning homes is I'm also buying stock in Home Depot, which again is a phenomenal stock to own on its own. But if you need that stability and diversification in this sector, have you ever heard of Lennar Corporation?
I have. I have.
You want to tell us a little
Big
about
home
them?
builder. Yeah.
They are the largest, they are one of the largest home builders in the US.
Yep.
I feel like they benefit directly from the demand of, again, everything people are looking for right now, which is new homes, especially as we continue
Hmm.
to go deeper and deeper into the housing shortage. These three, Home Depot, Invitation Homes, Lennar, and what was the other REIT you were talking about?
Mid America apartment communities.
Are all phenomenal companies to own. That's kind of why we are looking at HOMZ as a perfect, unfoolish investment, because you're allowed to have top holdings that give you exposure to both rental and the growth in home construction, as well as renovation. It's truly a diversified way of playing the housing market.
Yep. Yeah. I mean, to talk about the home builders specifically for a sec, the way Homes is structured their ETF, they kind of have an equal amount of money in each of the, I'll say big five home builders. So DR Horton, KB Home, Lennar Corporation, Meritage Homes, and NVR. I kind of like that they're pretty equally weighted in that segment of the ETF. You don't have too much exposure in one in case, one of them does poorly or does, less than what the overall market's doing. But you still have enough diversification to kind of float you if one of them does do not as well as the others.
Or if the entire housing market just has a downfall or a problem, you're not going to be as impacted
Sure, you won't be overexposed. Yeah.
versus, you could see one of those easily getting its price cut in half.
Mm-hmm.
Owning an ETF is going to mitigate that impact.
Yeah. I
Um,
mean, I wish they had Dreamfinder Homes in there. Kind of a
Good
fan of
call. Good
Dreamfinder
call.
Homes. Really small market cap. So, I think they're only a few billion, if I remember correctly. I'm trying to look that up quick.
Do you think that's one of the reasons why they're not in that
I think
ETF?
so.
It's
I think they're a little too small. So Dreamfinder Homes is only 3.2 billion. Where I think, all those other ones are much, much larger.
I've looked at
But
Dreamfinder in the past, but I've never pulled the trigger. Do you own Dreamfinder by any chance?
yeah, I wish I owned more because when I bought it, it was low, and now it's done pretty well. But I didn't buy a huge chunk of it. It was just kind of a speculative buy. I had read some info on it, and I was like, I like the housing sector. I like the home building sector, and this is such a small company that the upside could be pretty big. Where some of the larger home builders, it takes a lot more to move the needle. So I own it. I don't own a lot. I wish I owned more.
I want to pull up the Holmes stick ticker right now. Okay,
Mm,
it's only been on the market barely 5 years,
yep.
right? We've only about doubled in those 5 years, which again is solid growth over a
Yeah.
5 year span. If you're telling me I'm going to get almost 20% return on my money per year over 5 years, I'll take it. I will
Yep.
take it. And I feel like Holmes offers that easy alternative for someone to spread their investment across the entire housing sector. And if you want to look at it just this past 1 year, look at 35% alone, just this 1 year. Even if you got in at 37, you're killing it.
Yep.
And I have this funny feeling that we're not going to stop building homes in this country anytime soon.
Nope. No, I think the sector's, you know, got some long-term tailwinds behind them. Um, I agree with you. I think it's at least 5 years, probably longer, because they just can't build them fast enough. I think this is a good market right now to get in. You know, home building in particular, um, and just set it and forget it. Even if it's just a one-time purchase, you probably want to be invested in that sector. You don't necessarily have to add to it regularly, but probably something to check on every, I don't know, every quarter, every 6 months, to see how the housing market overall is doing. And if you feel like you want to add to it, you can.
Agreed. And I think that the one thing I want to mention that is really important when you're looking at ETFs is HOMZ has a low cost and it is passively managed. So
Mm-hmm.
for me, I feel like it aligns perfectly with the set it and forget it philosophy.
Yeah. Yep. Totally agree.
And on that note, that is HOMZ, folks. And we are going to jump over to next. Everybody's favorite home builder. I know it's yours. I
Mm-hmm.
own some myself now.
Yep.
DR Horton. DR Horton. DR Horton, without a doubt, is one of the largest and most successful home builders in the United States. Do you know what year it was founded? It's
I don't actually. No, I don't.
I was three. 1978.
Oh,
1978. I just outed myself to the world on how old I am.
you
The
did.
company focuses on building entry level and mid range homes, which to
Mm-hmm.
me is the perfect market that we're in right now because they're in
Yep.
high demand. The housing shortage plays directly into their strength, and they continue to see consistent revenue growth by tapping into that affordable housing,
Mm-hmm.
particularly benefiting from who? First time home buyers.
That's it.
That, that, those are the people you want, especially
Yeah.
if the government passes legislation giving those first time home buyers a credit. You want to double down on DR. Millennials are starting families, I feel like, right now, and baby boomers are downsizing. To me, DR Horton, the baby boomers have the money that they can sell their houses that they've lived in for the past 30 plus years to go buy something brand new that DR just built. What are your thoughts on DR Horton there, Larry?
Yeah. So, I mean, what drew me to DR Horton at first is, like you said, their focus is entry level, homes, first time home buyers, which is great. They do have a luxury brand that they kind of market separately over from DR Horton overall, which I think is called Emerald Homes.
What do they call it?
I think it's called Emerald Homes. It's like DR Horton set up into four segments internally, and Emerald Homes is kind of a sub brand of DR Horton, and they only build like luxury housing. So that's not really why I invested in it. I invested in it because of their focus on a entry level first time home buyers. Kind of to your point earlier, and then B, they were one of the biggest housing home builders in the country, and I feel like they just can't build them fast enough, and to not be invested in it would be a mistake, um, because there's just such a macroeconomic boon for them. It kind of seemed like a no brainer, like an easy investment.
Agreed. Agreed. And I think that even in challenging economic conditions,
Mm-hmm.
the demand for affordable housing is going to continue to remain high. And DR Horton's operation, I can't even say the word tonight. Operational efficiency and volume building strategy
Yep.
because they don't build like one home here, one home here. they're building massive amounts of homes at a stretch, right?
Hmm.
And it's a strategy that I feel like makes them resilient to both the short term and long term housing market. I'm not going to say that their stock couldn't get cut in half in a downturn, because I think I did in the previous segment,
Yep.
because I do believe that that is the risk. And for any unfoolish investors out there, think the 2008, housing crisis.
Yeah.
It's those type of situations that could play hard into it. But I would also
Hmm.
say that this is a company that I would, if their stock was cut in half tomorrow, I would be doubling down that entire time.
Yeah. Yeah. I totally agree with everything you said. I think that's why we went with HOMZ first. The HOMZ ETF first is, it's just lower risk. You're more diversified. You're not overexposed into one stock. Where if for some reason they weren't able to build housing or there was some kind of economic issue, DR Horton could go down 50%. All of the home builders could go down 50% at any, really at any time. There's just such a shortage of housing right now that I feel like the chance of that happening is much lower than it would have been, say, 10 years ago.
And do you want to know what one of the main other reasons that I love DR Horton is? I'm about to
Let's
show
hear it.
you. Here we
Oh,
come
let's see
down.
it. It sounds like getting a visual.
Right there. Pays a dividend.
Mm,
We're talking a dividend. It may not be a whole lot, but for
yeah.
me, DR Horton offers that reliable dividend and has a history of what? Stock buybacks on top of the dividend. So I'm
Hmm.
getting a dividend plus I'm potentially getting a stock buyback, which is going to continue to propel the stock not down, but upwards. And increases the shareholder value. I mean, for me as a long term investor, those two key areas are huge. If you're telling me you're going to give me a company that's going to offer a dividend and share buybacks,
Hmm.
especially in the housing sector for first time home
Yeah.
buyers, I'm right there.
Yeah, I feel like dividends are really starting to kind of come back. I feel like the last 10, 15 years, dividends haven't really, um, been that popular with companies or investors didn't really care about them too much. Where I feel like there's a lot more focus on in the last like couple of years,
Yeah, and
which
I
we could
think
probably do a whole episode just on dividends, honestly.
100%. And I think that the other thing that seems to be coming back, and I'm just going to put like a 5 year trend out here for DR Horton stock,
Hmm.
we're
Hmm.
looking at just under 300%, just under 300% growth in DR Horton over the last 5 years.
Yep.
I hear a lot of people talk about Nvidia and all these other companies that are in the tech sector and how well they've done. I see the thumbs up.
Hmm.
300% in 5 years. That's pretty phenomenal returns on your money.
Yeah.
And for me, you're betting on our country and its growth. And it just tells me that, like, you know, DR Horton is a great place on top of, like, I own both HOMZ and DR Horton, even though DR Horton is inside of HOMZ, because I believe in the company that much that,
Mm.
I'm hedging my bets with HOMZ just in case, you know, things go down. I don't get a full impact, but I'm still getting the growth with DR Horton. And again, I love the dividend. I love the share buyback. And
Yep.
building on your point, I will say the one other thing that I feel like is a trend that was happening in the 90s and especially in the 80s that is now back in full, and that's stock splits.
Yeah,
Love a
that's
good
true.
stock split.
Yep.
I mean,
Yep.
I remember in the 90s, and I won't go too much into a tangent, companies used to split their stock multiple times a year. And it
Yeah.
just kept on going up, and I'm like, and then nobody ever did anything again until recently. But for me, those are some of the reasons I love, DR Horton and Homes. I feel
Yeah,
like by investing in both, you get a much broader exposure to the real estate market.
totally agree. I don't own homes, but I am considering investing in it. I didn't really know, honestly, didn't know it existed until you brought it to my attention not too long ago.
Yeah, and the main reason I had ended up buying it is I couldn't make up my mind between, do I buy Home Depot, do I buy Caterpillar, do I try and buy all these individual companies that I feel like are
Hmm.
in the construction, in the home building market. And I'm like, I just couldn't make up my mind on what I want. And I came across homes in my research, and I'm like, whoa, they're giving me all that, and I get to get REITs, which I usually stay away from. But I'm like, okay, sign me
Hmm.
up. And I feel like I, I think you mentioned it earlier. They really do have a solid diversification in that basket. They're not, if you look at the NASDAQ 100, like, which one? I think Microsoft is like overwhelmingly in one, or in Apple's overwhelmingly in another. And it's just
Hmm.
like, you have about five stocks in that, but the top five are controlling the lion's share of everything. And I feel like Holmes is a little bit more diversified.
Yeah, yeah, I would agree. It's not five, six, seven stocks controlling the entire market. It's, a pretty balanced portfolio across the whole sector.
And there's one other company that I'm not sure if you have ever heard of, and that would be Boston Omaha. Are you familiar with them?
Uh, kind of. I would love to hear your analysis on.
See if we can pull them up right here. And I feel like this is a company that I've been following for 5 years. And you can see how they've been doing over those 5 years,
Hmm.
right? And I
Did great during the pandemic.
see that, to me, is one of those things where I'm like, what happened?
Yeah.
What happened? I feel like Boston Omaha, a lot of people call them a mini Berkshire Hathaway. I call them a mini Berkshire Hathaway without the returns. Right?
Yeah.
It's almost like if you told Berkshire Hathaway to do the opposite of what they've been doing
Hmm.
the last 30, 40 years, that's where I have Boston Omaha. But they invest in various industries. They're supposed to be focused on long-term gains, but this is one of the areas that I was started looking into them. It's fiber optic telecom, insurance, and infrastructure projects.
Interesting.
And
Okay.
what really drew me to them was the fact of the billboards. I was driving into Boston on a regular, and I saw all
Hmm.
these digital billboards, and I'm like, who owns these? So I look them up, and I'm like, Boston, Omaha. They own and operate billboards across the entire country. And I'm like, who knew that was still a thing? But they have stable reoccurring revenue. I just
Hmm.
can't figure out why they just continue to go down.
Yeah, I can't really speak to billboards. I'm in the state of Vermont, and billboards are actually illegal in the state of Vermont.
Are they really? See, I
Yep.
feel like that might be
Banned.
a
Yep.
reason why Boston Omaha is going down. States are outlawing them, which I guess makes sense. They're supposed to have this diversified portfolio, and yet I haven't seen it, you know. But yet
Hmm.
I continue, like some of these other companies, I continue to follow them. But I feel like I'm following this one into the grave.
So you don't own them, but you've been following them for a
I have
while.
followed them, what, probably somewhere around 2019.
Okay.
And again, if we look at the pandemic, they're a $46 stock.
Yeah.
If you could go back in time and you still own it, sell.
Yeah. Dump it then. Yeah.
Dump it then.
Yeah.
But yeah, they own what's a company that's called Link Media Outdoors. And Link Media Outdoors
Mhm.
is one of the largest assets inside of their entire portfolio. And all they do is own and operate billboards. And I got absolutely obsessed with this like 5, 6, 7 years ago. And I was just like, who is operating all these? And then they started pivoting towards telecom because the whole philosophy of fiber is the future. And, they have Crescent Fiber, which is a provider of high speed internet um, in
Hmm.
underserviced areas. But I'm not 100% sure. I mean, maybe Vermont is considered a underserviced area. Um, I don't know, but I'm like, where are these underserviced areas? Because I gotta imagine they're not cities or rural communities around or
Yeah.
near cities. Um, but yeah, it's one of those companies that, I could just cut out of this entire segment, but I had to mention them
Hmm.
because the mini Berkshire blows me away every time someone mentions Boston Omar. They're like, "Oh, they're the mini Berkshire Hathaway." And I'm always like, then why have they gone up 12% in their entire history? Because
Yeah.
I'm looking for
15
that.
years. Yeah.
Like, that is not making money. That is not, um, the
No, if it
like,
only went up 12% in 15 years, you lost money because that's not even keeping up with inflation.
you just burned us all harder.
Getting crushed.
Yes, yes. But, I just had to mention them because I really feel like, they're a fascinating, fascinating company. And it's interesting that when you see companies constantly mentioned in the media and are branded as like a mini Berkshire Hathaway, my philosophy now is to stay away and just buy the real deal. Just buy Berkshire. Like, why do I need a mini Berkshire Hathaway when I could just have Berkshire
Yeah.
Hathaway?
Yeah. I mean, we talked about that when we were talking about getting into Pershing Square and then decided not to, and we kind of decided to, we're like, why do we need to invest in something else that isn't Berkshire, that wants to be Berkshire, when we can just buy Berkshire?
Totally agree. So, to sum up this episode, HOMZ, DR Horton, do not buy Boston Omaha. The other two offer a complementary exposure to the housing market. HOMZ, in my opinion, provides a broad diversification across the entire real estate
Hmm.
world, while DR Horton gives you direct exposure
Yep.
to one of the largest home builders in the entire country. And who doesn't want to own a little piece of the United States? I feel like both investments fit our unfoolish investing philosophy.
Hmm.
You buy them, you set them in your portfolio, and you let time in what?
Time in the market, not timing the market.
And you let time in compounding
Hmm.
do the work for you. That's right. Time in the market is that compounding. You nailed it. Um, you know, if you enjoyed today's episode, don't forget to subscribe and share. Keep tuning in to Unfoolish for more simple, smart ways to grow your wealth over time. With that, have a great one.